I want to start the conversation with some different sites that you use, and then we can just get the guys involved, and then we can just jump right into it.
Yeah, man. I'm gonna be very, very careful when I'm talking, because when I need advice, these are the guys that I'm calling. So this is kind of cool. So like Francis and I talk all the time. Me and Ian talk all the time. But doing the research is important. And so a lot of times I'm trying to pick their brain to find out what they're using. And so when I can add to my arsenal. And so we talked about it before. When I'm looking for ETFs, ETFDB is a great place for me as a resource, right? Because it's going to tell me the different types of ETFs, how they're performing, what's inside of it. And so I always look to that as a strategy to find out if I don't know about a sector, this is going to give me a great resource to find out what's in the sector. Now, inside of ETFDB, a couple of things. And if you're writing this down, put this in your notes. When I go into the site, what I'm looking for, a couple of things. Obviously, I want to know what's inside the ETF, but I also want to know the volume.
So you can go to, let's just break it down.
You know what? Should I share the screen?
Well,
yes.
Yeah, you can share the screen, but talk to him too, because it's going to be on podcast.
Got you. I'm going to share the screen. Give me 2 seconds. Let me get back to Zoom, and I'm going to share my screen.
So on the podcast, we got to talk spicy then.
I was share. They're going to be like, yo, look at all this boy's tabs, man. This boy go crazy. All right, so I'm going to share my screen. Thumbs up when you can see it. Thumbs up, Ian. We can see it on this side?
Yep.
All right, perfect. So ETFDB, here it is right here. Obviously, this is why I stopped. I heard the news about DraftKings yesterday.
So talk them through the audio. So you go to ETFDB.com.
So I'm on ETFB.com. I type in the search. So let's go to SMH since we talk about that all the time. So I go in my search, I type in SMH, and I hit, there it is, SMH ETF. All right, so first I'm looking at, all right, well, here's the price. All right, so the price for SMH right now, if I'm buying it as a share, it's $269. I can see that. Great. If I'm looking at it for the option, that doesn't really matter too much at this point. But I want to know a couple of things. I want to know the categories in. So here it tells me, right, the category is technology equities. It's a large cap, so there's big companies inside of here, and it's in a sector of, it's in the asset class of growth. So a lot of times we see growth, and that is what I'm looking for. I want to see something that accelerates over time. Now, inside of the next tab is holdings. And so when I click there, it tells me the companies that are inside. And so you can see here, and we talked about this on Monday, these are semiconductors. And so TSM is something we always talk about. And what I want you to notice is that on the right-hand side, it says assets. And so it tells you the percentage that this ETF has of this asset. And so this ETF is consisted of 15% of TSM. So that's a large percentage, right? And that makes sense because we said out of all the world's semiconductor producers, TSM makes up about 50% of the world's production. And so that makes sense that this would be the largest ETF. Now, what's interesting is that NVIDIA is now the number 2. 3 months ago, or maybe 6 months ago, when we showed you ETFDB, NVIDIA was like the number 5 in terms of percentage of asset, but that's moved up. Obviously, we've seen NVIDIA's price move up. They've had some major announcements, and they had a stock split. Right? What they do, 5-1 or 4-1?
I think it was
5-1.
I believe so.
Yes.
Yeah, either 4 or 5. No,
4 to 5-1. So the stock split is gone. NVIDIA has been running. So obviously in ETFs, you can change your allocation. It's one of the things that happens. If you're managing the ETF, you can change the percentage of allocation. So that's happened. And so you see all the companies that we talk about, right? We see AMD down here, ASLM. We actually had somebody call in to talk about that. So that's important. We watch that. Next thing I like to look at is this performance. And so this is easy. It tells me what's been happening over the past 5 years. And so you can see it's had a 322% return, which is absolutely ridiculous, right? Over the past year. So 2021, it's had a 58% return. But like, look over the last month. I think this past month, it's been its lowest.
Told you.
And it's the last month, it
wouldn't work out. I knew it wouldn't work out.
It pulled back just a little bit, but that's okay, right? Because perspective is key, right? So if we have gotten into these asset classes early into 2020 or early in 2021, we're still up, right? Even if it pulls back 2% like it did on Monday, we still have a percentage that is worth being proud of. All right. So this is ETFDB. This is one of my sites. I'm gonna run through a couple and then I'll let y'all go.
So, but also go back to that holdings.
Let's do it.
This is also important. When a friend of mine a while ago asked me, he was like, what's better, NVIDIA or AMD? Which one should I buy? And I'm like, SMH. The reason why I said that is because you got both. So maybe now if you visually can see it, it kind of makes it easier what we've been talking about before, where now the all-star team analogy that Ian speaks about, you can actually see like, all right, this is what is appealing to me with ETFs is that, you know, I don't have to like try to bet on one winning horse. You just bet on the whole team. And odds are that, you know,
things are going to go in your favor.
Exactly.
Sure.
Exactly. So that's something that's very beneficial, especially if you are uncomfortable about investing in stocks. If you're new to investing in stocks, if you don't know which stock to pick, this is why we talk about ETFs so much, because it gives you a lot more confidence, I think.
Yeah.
And it, not to cut you off, and it doesn't compromise the rates of return. I was kidding about the 1 month thing, but I'm just using that as a skeptic because people always have some level of negative comments no matter what. Like I put on Instagram today, if you invest in ETF or index funds for 40 years and it earns 10% a year, then you'll be a millionaire. And they're like, what ETF or index can earn 10% a year? And we just showed you it had 300.
The ones you've been calling.
Yeah, there's about 40 of them.
Exactly.
Yeah. So I mean,
VUG, SMH, VTI, XLK. So
that's it right there. So like in terms of ball, like we always say the analogy, right? Here goes your LeBron, here goes your AD, and here goes your Malik Monk.
But imagine if they added Lillard as well.
Right. Exactly.
And Russell, and they shared the ball, and Russ can actually hit threes, which I see he's been working on.
Shout out to Russ. Shout out to
Russ. Shout out Brody. He working on this game.
I'll go another one since we always talk about tech, and I'll just show you the holdings. The same thing, right? We're looking for those top two. We should be familiar with these top two. We always talk about. Yeah, there it is, right? So this is XLK. So this is another ETF. This is the technology sector, however, right? And so you look at those top two, 21% allocation. Actually, Microsoft has actually moved up. It wasn't always at 21.46.
It's almost equal.
It's almost equal to it. So that's 42% of this ETF is based around Apple and Microsoft, two solid companies that we're pretty sure that they're not going to go anywhere.
Let me ask
and
Ian,
if they do,
let me ask Ian.
We all in trouble.
Being that 42% of the ETF is in two companies, is that too much exposure?
Not if you want to be rich. The real cheat code, pun intended, is when you have an exceptional amount of data on a company, it makes no sense to diversify. Like when people are like, well, you shouldn't put all of your eggs into one basket. It's like saying, hey, give me 10 scrub players and maybe 2 good ones. No, the big 3 strategy, the big 4, I want to be equally weighted 2 index, 2 tech that are most dominant. So if Apple goes away in 2 years and Microsoft won't, which they, both will be dominant for another 30 years. I'll replace them with the top 2 tech at that time. But the truth is, because of regulation, you want to tell people to be diversified so you can't sue. For me personally, and for my child, Xander, baby, I love you, go to bed, that has freedom now. Xander is 6. Xander college is paid for. Xander doesn't have to work until he's 30. From diversifying less and concentrating on companies that are going to kill more. But I'm not an advisor. So I know one that's named Rashad. Do whatever you want to do. But as being one of the top investors, in my opinion, of all time and the greatest of this era, please follow the blueprint. And you're going to notice, like when me and Francis get the vibe, we're going to agree on the same companies the same way that me, Troy, Rashad, Trap do as well. But diversification is a trick for those who don't know what to do. Right. You notice when people are even on the angel side or venture side, when they invest in companies, they're going to pick a few quality companies and then pour a bunch of money into them. They're not going to have 1,000 companies that they invest in. They're going to pick 10, maximum or 5, and go heavy.
Yeah, no, I agree with that point 100%. As far as like, personal in your personal portfolio and your personal strategies and things like that. To the question as far as like whether or not like this particular ETF is overexposed to Apple and Microsoft, me personally, like I look at ETFs as the way that I do have some type of diversification, right? Like that's like the whole point of having an ETF in my portfolio. So for me, this particular setup, it is a little overexposed to Apple and Microsoft for an ETF. Now, if this is my personal portfolio, they're cool, you know what I mean? Yeah. No problem, you know what I mean? But as far as the ETF goes, I like to see a little bit more. I think that's a lot. So it's almost half of the fund is a big 2. So it's a little overexposed for my taste for this particular ETF.
Yeah, but they can always make the adjustment. So if Apple isn't as hot, they can drop the allocation down. and make an adjustment. Same way mid-game. So if like LeBron is cooking, we got to let LeBron while hitting the three.
Yeah, that's a fact.
We got to let him play. And then if you guys go to year-to-date-return.com and look at these, you can go see what the all-time returns on them are. So that'll be gym number 2. But if you look at XOK from 1998 through now, 509% return. Pretty good to never have to look at an investment, never have to do any analysis. And, you know, so if you put 10,000 in, you'll be up $50,889.
Yeah.
Pretty smooth.
So I got the past 5-year performance, 5 year, 245%. So again, we look at, and yes, does have a lot of exposure to the top 2 tech companies, but as they innovate and they create, we can see the percentage growth that has happened over the past 5 years. So solid one in our portfolio. I'm gonna go to another thing real quick. Let me go to another one. So I know somebody's killing me because I got like 70 tabs open. Just be patient with me. I do.
That's supposed to be, man.
You know this tab right here, Francis.
Of course.
You see it. All right. So Estimize
is to close all the other ones out.
Yeah. Yeah. So Zax is something I've been using lately.
Zax.
Yeah. Zax.com.
ZACKS.
Oh, and it's gonna act up. So you know what? We won't go to the Zax. Let's go to Estimize.
Well, what is? Can you just explain what Zax is?
So Zax is another site that gives you a lot of the technicals, a lot of fundamentals, and then it has a rating system. And so I like to see that because I don't know every company, but what they do is they put in a sector and they show you the growth that they had over the past year, what their future growth looks like, what the volume looks like inside of the company. Now it's acting up right now, but that's okay. We'll keep going because we got more than one tool. And so Estimize is something when I want to look, right? When we talk about Estimize, yeah. I'm not sure you've seen this one before. You seen this?
No, I don't think so.
And so Estimize is a company, is a site that I use when I want to know the earnings, right? So when we're talking about the earnings report, and we use Apple all the time because a lot of people are investing in Apple. I'm looking at their past performance. And so it'll tell me the earnings per share. So EPS, a lot of people see EPS all over the place. So EPS is the earnings per share. And it'll show you what it's done for the past couple of quarters, right? So it goes all the way back to Q4 of 2019, Q1 of 2020, all the way up into Q3 2021. And so you can see what the Estimize community, I think it's over 11,000 analysts in here. So it tells you about how many people in here. 11,000 analysts are doing their ratings. And you can see what the community has said that they thought the earnings per share would be. You can see what Wall Street said and what it actually did, right? So this is like $1.30 per share. What I like to see is the revenue. I love going to the revenue because it gives me a fundamental idea of how the company's been growing. And so if we look at Q4 of 2019 compared to Q4 of 2020, right, you see there's some similarities, right? 62 billion, 63 billion. And this is what the estimate is right now for Q4 of 2021, right? So it's 84. So in the community of analysts, they're saying that there's some substantial growth, right, for it to grow by 20 billion. And so when we're talking about earnings, I know it's not the say all be all, but I know some people, that's their strategy. They like to get into a stock or a position right before earnings and it runs up and hopefully they make money. But when we're in it long term, we like to just see growth in the company because that tells us that's something that's what we want to be in for the long term, right? Apple's one of our long-term positions. And so when I want to find that, the revenue models out, this is one of the sites that I use. Ian, wait. Before I go to anything else, let's go to the VIX. And so we talked about the VIX on Monday.
Major.
We talked about the VIX on Monday. So I had it up for the year. Let's go for the 3 months. So the VIX is the volatility index, and it tells us how the market is moving, right? And so we can see, actually, let's do it for the year because we can go back to last.
Better context.
Yeah, let's go back. So when we talked about high volatility and I was like, hey, it tells you how the market is moving. So last October, we had a pullback at the beginning of September. And then I believe there was one at the end of October. I said that Monday. All I have to do is just look at my VIX. This number has gone up to 42, 40.28. And so that's heavy volatility. And as you can see, right, there's going to be a substantial drop in the market at this time, right? But as we get down here, we start to see some steadiness. And then in February, we had another drop, right? Because the VIX has gone up. And so we kind of think of it as an inverse. When we talked about inverse indexes, sort of think of the VIX in that sense, where as we see the VIX go up, right, that means the market is going down. And so we see steadiness, and there's a we got down to the 16s and teens. And Ian, we said we like between 10 and 15.
Yep.
10 and 15. So we were down here in June. We saw some gains. Lots of gains all through the summer. And then boom, we got up to 28 intraday on Monday, which tells you this high volatility. Now I think we pulled back today. Where are we at? Like 20?
Yeah, we're at 20.87. I said on Monday we was going to end up dropping to 20 by next week. So
that when we spoke about this a few weeks ago, I said I fell asleep at the wheel. Now, if I'm saying I fell asleep at the wheel, that means there's a lot of people that fell asleep at the wheel, because I get a lot of calls like, Troy, what we doing? I fell asleep at the wheel. Why? I should have been watching the VIX. But sometimes you get caught up in doing so many things and try to study so many companies, you forget some of the fundamentals. And Francis, we had this talk the other day. We stopped doing some of the things which made us successful.
That makes it work, yeah.
It makes us work. And so the VIX was something that I forgot to look at, but I would have known. There's a lot of other indicators, and I'm sure the fellas will talk about it tonight, but this was one of them. Another one is Barchart, right? So ETFs is cool if we're talking about multiple companies in one, but if we want to look at singular companies, again, barchart.com, barchart.com, we can look at singular positions, and it'll give us the complete rundown. Now, for some of this look like, this is too advanced. That's okay. I'm gonna take you to another site that is what we use for students. But again, it gives you the performance, right? We can see how Apple has performed. Let's see if it's tweaking. Oh, nice ad.
I give some key levels for VIX. I haven't even given these on Market Mondays for the year.
Let's do it.
Yeah, you want to do that?
Yeah, 39.90, 34.49, 28.18, and 24.36. So if it gets to any of those levels, the world is going to panic if it's a quality company. And I'm sure when Francis pulls up the algorithm at his show as well. But those are good times to buy some of the best companies on the earth. So if you look at May, it went to 28.95. This week, we went to 28.69. So when it went to 28.18 and you would have saw that while everyone else was panicking, you should have been thinking, it's time for me to load up. And look what happened Tuesday, Wednesday. Right. The big scare is over. We're starting to move back to the upside.
Yeah. Oh, and the thing about the VIX also, man, is that, you know, you can profit from the VIX spikes, right? When the market is fearful, you can use it as an indicator for, you know, when you might want to look at getting back in, buying the dip, things like that. But you also can play the VIX ETF, which is the VXX, right? Mm-hmm. And when you play the VXX with options, you know, as a short-term hedge, even if you traditionally trade with a stock portfolio, you can catch short-term pops in the VIX, which the VIX is notorious for these, you know, short 1 day, 2 day pops when the market has something that shakes it up. In this case, you know, the Evergrande situation with China and the fear that came out of China with the defaults that's happening in the real estate market out there. That's what kind of caused this kind of fearful moment that we had in the S&P. It caused that VIX spike. You can make a good amount of money. You know, a lot of times, you can catch a good 100%, 200%, 50, 60, 70% pop while the rest of the market is bleeding to death just by kind of trading the VIX back and forth.
Absolutely. And tying to that, for those of you on the future side, so you can also trade the VIX future. So just like you told you can do VXX. So I always say there's no such thing as a bad market, only bad entries into it. So if you do the VXX like he's telling you about, and you're still holding long term, and when the market tanks, you ride VXX up and the VIX future, whatever money you lost as a result of the drop, you're going to offset that probably by 2. Yeah. So I'm telling you, tonight going to be special. But VXX and VIX future together, when the market goes down, if you do it 4 times in a year, any losses that you end up having on any huge drop,
listen,
offset for sure.
When Trump was in office and that man used to send out them tweets at like 12 o'clock, 1 o'clock at night.
I can't lie. I miss him for the volatility. I cannot lie.
Yo, man. You can make. We used to make a killing. We were up 2 a.m. trading VIX futures or even ES minis. You know, we trade the ES minis and catch puts on the ES minis and make a killing. You know, you wake up in the morning, your portfolio may be hit, you know, good 10, 15% or whatnot, but you know,
up 15, 20,000 on the future side.
Yeah. Mm-hmm. Yeah.
Yeah. Yeah, I mean, y'all crazy with it, man.
Come
There
on,
you
man.
have
So
it.
I'm gonna give him one more, and then Ian, I'll let you talk about that because there's one that I'm gonna talk about two more actually, because the research doesn't stop after that. Hypercharge.co was something that you said on Market Mondays, but I wrote in my notes, and since you said it, I was like, man, this is crazy. So I'll let you talk about that, but I'll tell you the last place I go when I'm done with my research. That's the site that these two gentlemen created called the Cheat Code. And so after I do all that research, and I'll let them talk about it, and I actually show why I use it. But I look at it and I use it as my final tool. Okay, like let's see. I'm looking at this chart. It's giving me indicators. But I'll let you talk about hypercharge.co.
Yeah, Hypercharge. Like if you guys ever looked at all this financial data and you're like, I don't know what the hell they're talking about. They have really easy. So Hypercharts made the graphs on revenue and data simple enough that like a third grader can read it. So if you want to go look up Apple, Microsoft, AMD, you can see really, and even for those of you that like crypto, you can see it. And it's really easy. Like if you compare Apple versus Tesla, Apple versus Microsoft, Apple versus any company that you love, it will tell you which ones are doing better in terms of revenue, profit, etc. And it gives you a quick breakdown of how they're doing in comparison. So if any of you feel confused, Hypercharts is a easy place for you to know how much money a company is making, how they're doing a comparison. And if you want to compare 5 or 6 companies against each other, it'll tell you in 30 seconds which one you should probably lean on and invest in long term. So if I look at like Apple really quick at the annual, they're at 36.4% annual growth, 347 in annual revenue, and then their increase has been like 25% in some of the key revenue segments. And then for those of you who love crypto, you go to Bitcoin, the analysis is there. It's pretty amazing. And you'll love the analysis that you do. So if you've ever been confused about anything that we've talked about, or you get on CNBC and you're not clear, Hypercharts is absolutely amazing.
Hypercharge.co. And one of the things I love is that they kind of put things in bar charts for you and explain it very detailed. This is the revenue. This is where the revenue is coming from, right? So if it was Apple, it could have been from wearables. It could have been iPhone. It could have been iPad. It could have been a Mac. But it shows you literally from a company standpoint, the total gross and what that singular thing did to attribute to the growth of the company.
Yeah, and this is something we hear, like, do your research. A lot. That's a common question. Is like, what does that mean? Do your research. So just spent about a half an hour just giving you different tools that you can actually research. And it's like anything. You're not going to learn everything at one time,
right.
but the more you familiarize yourself and, get enthralled with the information, then it's going to become like a second nature.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.